All right, so Jim is going to introduce himself first, and then he's going to talk about his first stock.
All right, well, hello everyone. Thanks for taking the time to be here. My name is Jim Penn. I'm the Manager of Retirement Services here at VectorVest. I've also been here just about 12 years. Todd and I came on right around the same time. And so it's good to be here. All the familiar names. Great to see you guys are here. As you guys know, from my retirement side of my work here, when I do these hot stocks, I like to joke around that they're usually maybe a little more lukewarm, because I'm usually looking at the longer term. So the fundamentals come into play. And it's funny how we've been talking about fundamentals and the technical analysis that goes with it, which if you break it down in the VectorVest program is VST, right? It's the value, safety, and timing. But you add these other technical indicators and it becomes very powerful. Anyway, what I've done is my first stock is Audio Codes Limited, AUDC. Okay, Glenn has the graph up here. And I wrote down quickly what they do. They're the vendor of advanced voice networking and media process solutions for the digital workspace. I have no idea what that means. I'm only half joking, because the reason I say that is because Glenn, let's go to the spreadsheet first, or the viewers tab first. So when I look at a stock like this, how did I come across this stock? We all have different ways. Each time we come, I try to come up with a different way to find some of these stocks. And what I did this time to find AUDC is simply go actually to the stock viewer page. Glenn, if we can go there. What is the stock viewer page? It's simply the 8,200 stocks or whatever we track now, sorted by VST. That's all it is. So I decided this time to go up and find a good quality stock that was somewhere near the top. I did a little cherry picking through here. And Audio Codes is right now the number, what is that, 2, 4, is number 6 ranked stock out of the 8,260 we're currently tracking. So that's kind of where I started. Instead of just going into ruler stocks or long-term winners, I still wanted a high relative safety stock. And so we found one here. 1.39 is the current relative safety. The price appreciation potential or relative value at 1.48, very strong. So right out of the gate, and it's what we would call fairly valued, at 24.25, trading at the value roughly at $27. Glenn, if you scroll over just a little bit more, we'll take a look at some of the other indicators. So you've got relative timing at 1.46, as we saw, 1.50, as we saw from the graph, strong momentum, short-term momentum, and it all adds up to a very strong, very nice VST rating. I love the CI, the comfort index. Right, without even looking at the graph, which we already have, we know that northeasterly direction of the graph patterns is what we want to see. And then, of course, we've talked about earnings growth rate.
Jim, in the UK, we call the comfort index the secret weapon.
That's it, yeah, the secret weapon. I love it. Yeah, you get a sense. I mean, we call it the price growth persistence. What better way to define a stock that you want in your listen, whether it's your retirement portfolio, whatever it might be, in a swing trading to a retirement portfolio. So that's what we like. That's why I like the stock. That's where I got it from. So Glenn, you can go back to the graph. And once again, we talked about, I've said this before on the panel as well. When Steve and Jerry are here, and obviously these guys all are candlestick experts and all. It's just something I've never learned, as my time on the trading desk always taught me. It all comes back to support and resistance, all of it, right? Because Glenn, when we kid around, why do I tell you, why does the stock go up today? ABC, so whatever it is. Why did that stock go up today?
Because there were more buyers than there were sellers.
There was more buying than selling going on, right? And so that's where the supply and demand comes in. So I'm a big support and resistance guy. So I like the fact that Audio Codes has moved up. Obviously it's got some support. I don't know what price that is, right around 20. Yeah, it's right around 20 buy. I can see on the marker there. And again, you've got, is that today it hit the high? Hit an intraday high today on the stock, which actually, if you go back, I think it might be an all-time high on AUDC. But that longer look, now this stock does pay a dividend. It's not a huge dividend, not a huge yield, so I won't focus too much on that. But I just like the movement of the stock. I've got a buy-rated stock, number 6 on the stock viewer. And again, I would probably put in a buy stop right above the higher high if I were going to trade it today, and keep that stop somewhere around support, looking at a little longer term, right? evaluate it as I went through. But I just thought the nice graph pattern, certainly the nice earnings pattern and earnings growth rate, which we have focused on a lot here already today. So
I like the equity curve,
Yeah.
even on a 5-year graph. I love the equity curve. 6-month graph. Look at that.
yeah,
Look at
you've got earnings, that are strong, and we could use, and not that I use this, but David, I don't know, you tell me if I'm right or wrong, if I recognize, and it's not as long term, of course, as what you were looking at, but we've got some consolidation. I still have earnings rising,
Yeah.
right? And then we broke above, a full candlestick above of what was resistance.
and it was just like that. Ain't that your rocket bottom rocket thing of the shooting up into space?
Well, look at the last gap.
Yeah, it was a gap. It was a gap in there, certainly. Yeah.
And it's breaking above resistance and gapping up. Bob, you say rocket
Rocket launcher.
launch.
See, I did it by accident. See that? So,
And then it pulls back and kisses the old top.
Yes,
and,
it did.
If you see a market pulling back and kissing, invariably that means that there's institutional activity there, because the only people who've got the strength to buy the low of the day are seasoned institutional traders. The average retail trader, with greatest respect, invariably buys the high of the day because there's a little bit of confirmation
Sure.
there.
Hey, Tom, I know you're out there. You know what to type in the room, right? I know that you're out there. When we use support and resistance, Tom is going to type it in a second. But I love that candle did go right to that level of support, and then it ran up. It ran up.
somebody asked a question there. Mary asked a question, where did we get the AUDC, which search? And Mary, this time, instead of using a search, I kind of went back to some basic VectorVest fundamentals, and I just went to the stock viewer. And I really just looked up, I kind of cherry picked through those top stocks. To what Todd was talking about earlier, looking at industries and sectors, I actually was looking at the healthcare HMOs. I believe WellCare Health, I believe, is one of those. You don't have to go into it.
Yeah, it
But it's was another one I looked at, and some of the other stocks in that industry, and just looking for what Todd was alluding to earlier about the strength of whether it's a sector or an industry. So anyway, so that was more of a not so much a retirement stock as it is just a good quality, strong earnings growth stock, and again, pays a dividend, but that's not really the point in this particular stock. So I thought I'd share that one.
And people know what I like about support and resistance. Both Tom put it in there. Man, this stuff really works. Support and resistance really rocks and rolls. I knew you were here, Tom, but Jay beat it out for you. He beat you out.
It's just all right. It's all about where the buyers are and the sellers, and as David said, it's more about the institutions and the funds, and where is that support? Where are the buyers willing to step in? And
Well, it's a lot tougher to do. It looks really easy in hindsight. It's a lot tougher to do when you're actually there.
Sure, yeah.
And it all comes down to the old thing. Right? There was a famous bond trader in Chicago called Charlie D. And he used to say that anything that works hurts.
I had an old bookie named Charlie D.
Oh boy.
And he said,
He was from New York. Yeah, that's right.
and
He said if it doesn't work, it hurts.
and you don't pay,
If it don't work,
Anyway,
if it don't
so-
work, you can't pay up. It's still gonna hurt. Let's
Anyway,
go.
so that was my stock, basically coming from the stock viewer page, and just sometimes we get into this and we forget the power of VST. We forget the power of simply clicking on the stock viewer page and finding a good quality stock. And I love the graph pattern, and especially as we've just beaten up the power of earnings per share and the earnings growth rate of that, and a buy rated stock to boot. Now, the next one I chose was JP Morgan. Now, this does come with more of the retirement hat on here. This is set to a 5-year graph. I like to call it on the bottom, that's the dividend. That's the dividend payout. Now, JP Morgan doesn't come up on the drip list, the 25 plus, or the dividend aristocrats. I believe it comes the 10 to 24. But it's got a very strong history of raising dividends, paying their dividends, and you can see I like to call it the golden staircase as it continues to climb. That's the dividend payout. You've got a very nice yield here of just about 2 3/4% with a $3.60 dividend. So from that standpoint of generating income on a good quality stock, I love that. Glenn, you could probably throw support resistance on here as well. You've got, again, and this one is the 5-year look. And I like that. I'm just learning this myself today. So we've got consolidation again.
Sorry, Jim. I just want to make
Right?
sure that
No,
they can
that's
see
okay.
it.
Yeah, no, thanks.
There you go.
So we have it consolidating. Earnings per share is still rising. Stock breaks out. Good dividend, good long-term retirement type stock to go out and play with. Now, you've always got the ability, you know, in downtrending markets, and we don't talk much about it here, but we talk about it in retirement services. We talk about it in our coaching groups, about the ability to use collar trades, protective puts, and this is the perfect example of a stock for the long term. I could sell covered calls against this. I could, you know, place my put spreads or collar trades in times of uncertainty in the market. I just love the stock, and I just think, you know, the guy who runs the company is a pretty smart guy, Jamie Dimon. Kind of got to believe they'll just keep moving in that direction. So that's more of my retirement stock for today. The longer term, just moving nicely, broke resistance, and is starting to move up now. So more of the prudent / conservative look. And those are my two stocks for today.
They also, Jim, pulled back beautifully. The low of the last 6 months is exactly the same as those previous highs,
Yeah.
a little bit back there.
Yeah.
And that's also quite a strong feature of that. And the way the market went sideways, went up a little bit and then came down, is a classic flush out as well. And that's a pattern that a gentleman that I've got a great deal of faith in called Richard Wyckoff, who wrote his books 100 years ago. He would have called that a Wyckoff spring. And for those of you that are coming on my course on Friday, I'll spend an hour talking about the Wyckoff spring.
I knew that. I just forgot the guy's name.
Okay. Richard Wyckoff.
Anyway, yeah, there's so much to read in that. But that, you know, for me, I'm just looking at the 5-year graph again. You can go to 1 year or even 3 months, and you know, you see the same picture. And we're looking again for that northeasterly direction on price.
That's a
And
great
again,
chart.
you have J.P. Morgan. Now, I was going to use Bank of America. I was going to use some other, well-known OEX type stocks, blue chip stocks here, that has kind of a similar pattern. If you want a lower price stock, and in the same vein, I guess two of the others, and you don't have to bring them up in the graph. Visa is a stock I love. We own it in our retirement model portfolio. MasterCard was another stock. All these stocks, again, for the longer term. Dividends, growth.
Visa and MasterCard is going up
Yeah,
specifically
yeah,
because of
yeah.
me.
Yeah.
Using my,
Yeah.
it's all because of me. So thank you. You can all thank me because Visa and MasterCard is going up.
But anyway, that's so those are my two stocks. One a little more. I wouldn't even come close to calling it aggressive, but just using the basics of VectorVest and putting the VST to work, and then just a good quality blue chip, safe dividend stock. If you go to real quick, and then I'll finish up. You can go to the spreadsheet again, and just take a fast look. If you scroll over at the dividend information for J.P. Morgan, the CI is at 1.28. It's going to move with the market, but you've got earnings growth rate. You've got strong earnings per share. If you scroll just a little more, we get some dividend information, and then we'll wrap it up. All right, so you've got a nice $3.60 dividend, a strong yield, strong dividend safety. So a nice stock to put in your Christmas stocking for your retirement portfolio going into next year.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.